Hey, Jason here. Today's free training prior video, we're going to cover what the income statement is. Frankly, because I looked on past blog posts and we got almost 1,000 blog posts and I've never once covered what the income statement was, shockingly. So before I get to that though, I'm to let you know you can get this series of podcasts anywhere in the world for free on all major podcasting platforms, iTunes, Stitcher, SoundCloud, Anchor, Spotify, and more. You can get this series as part of the I Love Value Investing podcast anywhere on the go for free. Okay, so again, we're up to almost 1,000 blog posts, and I've never once defined what the income statement is, which was kind of shocking to me. So we're going to go to the book definition, which essentially is all of this stuff. Wow, which is all of this stuff. Most of that's not important right now. So what we're going to talk about is, or let's define what the income statement is. So an income statement is one of the three important financial statements used for reporting a company's financial performance over a specific accounting period, with the other two key statements being the balance sheet and the statement of cash flows. Also known as the profit and loss statement or the statement of revenue and expenses, the income statement primarily focuses on the company's revenue and expenses during a particular period. So that was a mouthful. So what is the income statement really? The income statement shows you revenue, operating profits, net profits of a company. Makes a lot more sense than that sentence or those two paragraphs, I guess I just read out. So here is what an income statement is. Again, I'm using big companies just because everybody knows Microsoft and these. So here is what the income statement is. It shows you the revenue, starts at the top, and you go down from here. You subtract out cost of goods and services. That gives you the gross profit. You subtract out things like operating expenses, selling, general, and administrative expenses, research and development expenses. And then you get to the operating profit, which I talk about all the time as being ultra important. Then from there, you subtract out things like interest and taxes and interest or investment income. Also currency exchanges for bigger companies, stuff like that, to get to, oh, sorry, we don't do taxes yet. So put taxes back in, then you get the pre-tax income, then you worry about the taxes, and you get the final net income number, which is there we go. Reported normalized income. I don't know why they put it like that, frankly. On Morningstar, I don't know why they word it like that. That's why it took me a little while to find, because frankly, I don't spend much time on the income statement. Out of the three financial statements, I spend probably maybe 5% of my time on the income statement. And the most important things I look for on here are the revenue. Is it growing or falling over time? That's important to know. Operating profits, ultra important. Again, I talk about that all the time. And weighted adjusted shares outstanding, I think is what that stands for. Again, I don't know why they're wording it like that on Morningstar. Morningstar keeps changing their stuff. So that shows they have 7.6 billion shares. Yeah, that's shares outstanding because there's diluted share outstanding. So the only things I really pay attention to on the income statement, again, revenue, operating profit, and share count. That's it. So this video is going to be short and sweet. The reason I only look at those three things on the income statement is because I care more about the balance sheet and the cash flow statement. Let me bring you back here to my screen. So I'm just not talking to myself, or I'm not looking like I'm talking to myself at least. Those are the only things I looked at on the income statement. Why? Because to me, the more important information is on the balance sheet and the cash flow statement, which we'll talk about in future series, and those videos will be quite a bit longer. Because of that, because there's a lot of different nuances to, especially the cash flow statement. The reason I don't focus much on the income statement is because it's far easier to manipulate than the balance sheet and the cash flow statement. This is also why I don't use net income, in which I have several videos that I will link below this that talk about why I don't like net income and why I never use it. Frankly, I don't even know the net income for any of the companies I invest in for the portfolios I manage. That's how little I pay attention to net income. Again, I explain why I don't like net income in various videos below. So make sure to check those out. The main reason, again, it's far easier or far harder to manipulate the balance sheet and the cash flow statement. Another reason is frankly because I care more about the balance sheet, because that is kind of the basic underlying asset value of the company. If there's assets left over after subtracting liabilities, so again, we'll go over all this when we talk about the balance sheet. So that gives you kind of an underlying book value of the company, an underlying intrinsic value of the company. That's why I pay more attention to the balance sheet. Plus, it also includes things like cash and debt, which as a deep value investor are super important things that I want to know about pretty much immediately in terms of margin of safety. Cash flow statement, the reason I pay more attention to that is because that is the real world kind of value or real world profitability of the company is produced on the most of it is produced on the cash flow statement. Yes, operating income is important. That's on the income statement. But even when I do that, I look at what goes into operating income. What was the SG&A expenses? What were the cost of goods sold? I look at those when I get to, again, something else we'll talk about in future videos on the key ratios tab, and kind of gauge those over time to see what the operating profit and stuff like that is. On the cash flow statement, it literally tells you, again, we'll talk, I was just getting ready to show you, we'll talk about that in another video though, but it shows you, so the income statement stops at the net income level. The cash flow statement begins at the net income level. And then it subtracts from there things like amortization, depreciation, capital expenditures, debt issuances, share issuances, stuff like that, which is frankly far more important as well. So that's another reason I don't focus much on the income statement. Again, I focus maybe 5% tops of my time when I'm analyzing a stock on the income statement. Probably less than that even. That's probably being generous. I spend most of my time on the balance sheet and the cash flow statement. If you want to watch those other videos about why I don't like it, net income, and those will probably help further explain why I don't spend much time on the balance sheet or on the income statement as well. Those will be linked below this video. If you have any questions, comments, concerns, anything I missed, let me know in the comments below. I'd love to hear your thoughts on anything, especially if you watch the net income videos where I don't like net income. I'd love to hear your thoughts on those as well, because it's rare for even many value investors focus on net income. So if you're watching on YouTube, like, love, share, subscribe, comment, and hit the notification bell so you're notified every time I release a new video, and I release new videos all the time. If you're listening on the podcast, like, love, share, subscribe, comment, and we'd really appreciate a review. The more reviews, views, and listens we get on our YouTube channel, podcast, and blog posts, the more people we can help with this kind of stuff. And until next time, sorry, I lost my train of thought there. Until next time, have a great day. I'll talk to you again soon.